Hello, I'm Nathan Furr from the Brigham Young University Marriott School of Management. Welcome to the Entrepreneur Lecture Series. Today we are pleased to welcome Greg Warnock, Managing Director of Mercado Partners, a growth equity investment fund that blends financial capital with world-class sales execution. Previously, Mr. Warnock was a co-founder of VSpring Capital, a regional venture capital firm. He is recognized as one of the most prolific regional angel investors, having financially supported dozens of entrepreneurs. Greg is the creator of Junto Partners, which provides younger entrepreneurs with relevant training, experience, and ongoing assistance for new business launches. In June of 2006, he was honored with the Supporter of Entrepreneurship Award at the Ernst & Young Special 20th Anniversary event. He recently received Utah Business Magazine's Outstanding Director Award. Mr. Warnock is chairman of the Community Foundation of Utah, working to harness Utah's entrepreneurial spirit for the enrichment of all Utahns, present and future. Greg holds a degree in computer science, a master's degree in business administration, and a PhD in entrepreneurship and venture finance from the University of Utah. Greg and his wife Diane reside in Salt Lake City with their 2 sons. The Center for Entrepreneurship and Technology welcomes Greg Warnock to the Entrepreneur Lecture Series. Welcome, Greg. It's a pleasure to have you. We're very excited. The purpose of these lectures in general is to make this wisdom, this entrepreneurial wisdom, available not just to students but to a broader audience. And sometimes when we have entrepreneurs come in and talk, they talk about their specific experience with a single company or 2 companies and kind of the hurdles and things that they've gone through. But you and I have communicated via email already, and today we're going to take a little bit different approach. We're going to talk at the level of topics, and we're going to talk specifically about 3 topics that Greg has identified as being really central in entrepreneurship. That is knowledge, networks, and mentoring. Now, before we get into that, though, what I would like to focus on is, first, let's hear a little bit about your background and where you're coming from. How did you get started in entrepreneurship? What's kind of your story?
Let me start by saying, even though I'm a venture capitalist now by practice, I think of myself as an entrepreneur. Yeah. Still, today. Yeah. I think the formation of a venture capital firm is an entrepreneurial endeavor. Yeah. I also think of myself as a technologist. My degree in computer science has stuck with me. It taught me how to think in rigorous ways and how to process information and how to problem solve, and that has stayed with me. Yeah. So starting from the beginning with a degree in computer science and a master's degree in business, I came out of school with a sense that I would like to be involved in strategic aspects of businesses, not just in the programming, which is kind of what got me through school. And computer science was a great toolkit to be able to practice entrepreneurship. There were lots of problems in that day that you could solve with a programming approach. And I began to write programs and build businesses around software. And during the first, 12 years out of school, I engaged in many different businesses, entrepreneurial endeavors, starting out sort of with a tech focus, but migrating away from that. I ended up, this is a little hard to believe, but I ended up founding or purchasing 18 companies in those first 12 years. They were all small businesses. None of them had revenues over $5 million. But they were some of the best years of my life. I was learning at a phenomenal pace. I was exposed to a variety of different business models and fascinating people, and it was a period of time that I really enjoyed. One of the observations of that period of time for me was that it was harder to raise early stage capital in Utah than maybe it needed to be. And it was that thought that was the genesis of VSpring Capital. At the time, there were a couple of venture funds in Utah, but they didn't really have the same entrepreneurial focus that VSpring did. Among the 5 partners, we had founded or managed more than 50 companies. And so we thought we could bring that managerial, problem-solving, entrepreneurial approach to our investing and actually help companies through the difficult times as opposed to just funding them through difficult times. We assembled ourselves in a way that mapped well to the opportunities in Utah. We had a small biotech practice, we had some software practice, we had some retail capacity inside the firm. Our first fund was $118 million. We were a licensed SBIC, which means that we could access some government funds to bulk up the size of our fund. We invested in 28 companies and really developed a winning practice at VSpring. And I was there, I was the lead managing director for the first 4 years of its formation, was active in fundraising and developing the business practices that remain the underpinnings of that firm. It was in 2005 or 2006 that I met my current partner, Alan Hall. He was the developer of a business, or the founder of a business called MarketStar, and his specialty was taking technology products to market. MarketStar's clients include HP and Motorola, Cisco, Verizon, really the brightest 30 or 40 tech brands in the world. And from his vantage point, he saw the secret sauce and messaging and packaging and pricing and channel programs of those companies for their worldwide introduction of their latest, hottest products. And MarketStar supported that effort. And I find myself looking at our portfolio and saying, boy, if there was one thing that a venture fund could bring to a portfolio company that would be of the greatest value, what would it be? And my conclusion was that it was the legitimate influence over revenues. It's one thing to say, we'll professionalize the firm, we'll help you raise money, we'll roll up our sleeves and dig in, but what is it that the founders really wanted more than anything else? That was help me build the revenues of the business. And the early conversations with Alan sort of had that promise. So Mercado was founded around the premise that maybe a venture fund could bring world-class sales execution and channel development to portfolio companies. So Mercado has moved a little bit downstream. We look for companies with products that are in the marketplace, as opposed to VSpring, where we did several early-stage investments that were pre-revenue. And my thinking and competency have sort of moved into that space of growth equity as opposed to early stage.
Wow.
So that's my day job, is now growth equity at Mercado, but I still moonlight sort of as an entrepreneur and enjoy my association with younger entrepreneurs and fledgling businesses. So does that help with background?
That's great. And you kind of tell a really interesting story of kind of just this first activity building into this kind of very interesting career. My question for you is, how did you get started on that first venture or two? And let me ask you that one first. How did you put your toe in the water?
Well, it's kind of an interesting story. I had graduated in computer science, was a programmer for 5 or 6 months before I realized that maybe was not the ultimate spot for me. I took the GMAT to go back to school and do my MBA, complete a graduate degree, and I scored well and was recruited into the PhD program. We talked about this just briefly, but as I tried to weigh out the difference between the PhD program and the MBA program, the PhD program essentially said all this plus an office and a stipend and free tuition. And so
it's a hard one.
I did know enough to figure that part out. And so I went back to the university and took all the core courses for the MBA program. And while I was in school, my father-in-law, who was a practicing attorney and was brokering some investments with local businesses, had placed an investment for a fellow from Germany who was looking for investments in the U.S. And then he got called on an LDS mission for 3 years and was out of pocket. And during that moment, when the German investor was looking for some more oversight on his investment and my father-in-law couldn't come home from his mission, he called me and said, would you spend a summer trying to fix this investment that seems to be going awry? And I said, sure. I was an overconfident, 25-year-old. And so I spent the summer looking at this business, as trying to assess what was wrong with it. And I saw, examples of nepotism and a fairly relaxed approach to protecting their IP and what I felt was overspending. And so with his voting proxy, I replaced the management team and reinstated the IP and reorganized the business. And for somebody of my age, that was a real eye-opening experience. And the business turned around, and I met with this German investor and said, look, it will never become what you were promised as you made the investment, but it's profitable and stable, and if you want a bigger business like you were promised, you'd have to buy something else. This will never grow to become the vision that you originally was communicated to you. And he said, well, how do you go about buying a business in the U.S.? And I said, you can look at brokers and listings, businesses, how they're communicated for sale, and go meet with those folks and be in those places and see what opportunities can be developed. And he said, would you do that for me? I said, I have another month before school starts. Sure. And we met one more time, and I said, here's 3 businesses. They were all in California. They were all profitable, fast-growing businesses, and I laid them all out one at a time. Took about 45 minutes on each one, and in his broken English, he said, "Let's go buy that one."
Okay, decisive.
And I said, "Sounds great." It was the largest of the three, and he said, "Put together a proposal as to how we might work together." And I said, "Well, why don't we do a leveraged buyout? You put up all the money by guaranteeing some debt, and I'll run the business on your behalf. I'll become the CEO and run it day to day. And if I'm able to pay off all that debt so that all you have left in the business are your winnings, how about I have half the company?" And he said, "Sounds great. Let's go." And so I left my PhD program. I'd sat for my comprehensive exams, and I was working on a topic, so it was a really impactful decision. But I went to Southern California to take over operations of a chemical distributorship. I was 27, walked in as the CEO, changed the locks, took over the business, and ran the sales from $2.5 million to $5.5 million over the next couple of years and paid off all the debt. And when I accomplished that, he bought me a Mercedes. So I was, what was I, about 30, and I had this 420 SEL, this big gray, long, like,
wow.
it's like a gangster car, you know. And then I continued to run that business for a couple more years, and then sold that for about $7.5 million. So at 31 years old, I sold a lot of it on a long-term note. So I had this income that was $30,000 or $40,000 a month, and at that time that was real money. And I felt like, I didn't get so much money that I sort of ruined myself. I didn't go buy a Ferrari and develop a crack habit. But what I did do is I felt this freedom that I could spend my time on anything I wanted for the next several years. And what I decided to do, and this led to the 18 companies, which seems unbelievable, but I decided to start and get involved in as many businesses as I could in a short amount of time. And out of those, based on the probabilities of entrepreneurship, some number of them would be successful and it would work out. So I took a real probabilities approach to entrepreneurship and just had a blast.
Wow.
Just had a blast. So that's how I got started.
No, that's great. And you know, what I love is that you dipped your toe in and you just went for it, because I think sometimes a lot of the advice students hear is, you should go work for a corporation for several years. And that can be valuable and good. But it can also be valuable to start getting engaged in it, whether you're going to work with another entrepreneur or just kind of taking the bull by the horns. And I think that's, so that's a great story. And it actually serves as a great lead into, the three kind of key themes we were talking about earlier: knowledge, networks, and mentoring. And, first, let's just tackle knowledge. What is knowledge, in your opinion, in an entrepreneurial environment? How would you define that? What is it?
Let me say that some of my thinking around this stems from my reading of all the academic research relating to the topic. I mean, I'm a practicer of entrepreneurship, I'm a funder of entrepreneurs, but I'm also a student of the practice of entrepreneurship, and I think about it a lot. And then maybe some of my thinking around knowledge came from sort of that moment when I looked at all of the CEOs in the V-Spring portfolio and I said, if I had a magic wand and just endow them with perfect knowledge and judgment in one area of expertise, what would it be? What's the most important knowledge and skill an entrepreneurial CEO might have? They're a visionary, they're an accountant, they're a networker, they're a team builder, they're a strategist, a negotiator, they're all these things. But if you could make it so that they were perfect in one area and everywhere else they were average, where would you focus that magic wish? And my answer after some reflection was, if they could accurately predict buyer behavior in the markets that they address, that would be the most important thing for them to do perfectly. A lot of the rest of it you can sort of pick up, you can hire it done, you can figure it out, you can have on-the-job learning experiences. But if you don't have the ability to predict how buyers will behave, if you offer a red one, if you discount at 10%, if your competitor does this and you do that and they do this and then you do that, then how will the buyers behave? Then it's very easy to make mistakes that are unrecoverable. So I began to feel like knowledge around that area of understanding customers and markets and predicting behaviors was maybe the most important thing. So how is that acquired? And that led me into some more of this thinking that it's acquired over time, observation, validation, testing of assumptions. It's not something that you pick up in a day, you pick it up over time interacting in those markets. And that has implications for what you should do as a summer intern, how you would get involved in entrepreneurship, what businesses you would engage in, when you assess your own inventory of talents, thinking about buyer behavior is one way to sort of get a grip on some of those decisions.
Wow, that's great. And how would you suggest, to students that they develop that? How does one develop that kind of knowledge?
I think, and I give this advice to my sons, if you think about internships and first jobs out of school, getting closer to the customers is probably more valuable. Working any place inside a company is not the same as interacting with the customers. That's where you begin to feel the pain and assess how they respond to that, what their alternatives are, what their thought processes are, and that puts you in a much better position to predict their behavior downstream. So putting yourself in a condition to hear about, read about, watch, observe, participate with, negotiate with, partner with customers, I think is the most valuable way to learn the knowledge that's most relevant for entrepreneurship and the most difficult to come by.
Okay, that's great. So the most valuable is knowledge of the customers and how they react, and the most difficult to come by. And the way to get that is to go spend time with customers.
Or with people who spend time with customers.
With people who spend time with customers. And that's great. Now, what about networks? What do you mean by networks? How are networks valuable in entrepreneurship?
In my thesis, I develop a concept around resource marshaling. And I think of entrepreneurship as gathering energy and focusing it in a direction. A lot of entrepreneurs, I think, approach it and say, the process of entrepreneurship is to think a thought that's never been thought before, raise money, and open my doors and start a business. But in practice, probably many of the folks who come and speak to you in this series lead your thought in a different direction. That is just sort of marginally reckless approach where you just sort of jump in and become active. And how do you get people to believe in what you're trying to do? How do you get them to support your cause? How do you get customers to buy from you when you're not the best alternative? How do you get vendors to lend to you or to sell to you on credit when you don't deserve it from a credit standpoint? How do you get employees to work with you or for you when you can't afford to pay them? How do you get investors to trust your dreams for the future? It's kind of a selling, persuasive kind of activity, and your personal credibility and reputation has a great bearing on your relative success in those conversations. And networking is where you sort of access that credibility, those good ideas, those customers, those introductions to lenders and vendors and investors. And a lot of times the price that you pay for poor networking and a poor reputation is paid when you're not in the room. I don't know if you've had that experience of interacting with somebody and they come off as being not trustworthy or arrogant, and inside, if you just sense it, you find yourself feeling like, well, that's great for you, but you and I probably won't work together. You don't say it. You don't go back to them and try to teach them a lesson about networking or reputation. You just don't go back, and you don't give them any of your energy and your ability and your ideas and the kinds of intangibles that cause entrepreneurs to succeed. When I think about the entrepreneurs that we have funded at Mercado, Skull Candy and MetaConnect and Symphonics and Fusion.io, these CEOs are tremendously dynamic, tremendously credible, magnetic personalities. People just want to be on board and be part of whatever that is that they sense. And so this competent networking and reputation building and personal brand building is very fundamental to successful entrepreneurship.
How would you, I agree with you. I think you're right that, so this idea of, as an entrepreneur, you have to marshal these resources. How do you do it? Well, it's through your network. How do you build that network and develop it?
I think it's in part through being at the right places at the right time, sort of thinking about networking upward. You want to spend time with people that you believe are smarter than you and more capable than you and older than you and will challenge you, and sort of get away from spending all of your time among sort of like-minded people who don't really challenge you, and maybe you're the one who's providing the drive in that circle. Go make it hard on yourself and meet people by design. Think about the resources that you need, the credibility that you need, where you can get it, and with a sense of purpose, go out and build your network to achieve certain goals. So I would say the biggest difference between those who network successfully and those who don't is there's a little bit of a sense of purpose to it.
Interesting. I can see how, sometimes throwing yourself in the waters where you don't feel as comfortable, you're learning curve rate just goes up dramatically.
Yeah.
And well, you've also mentioned when we talked about mentoring, and that's kind of maybe a special place within a network, or maybe even a little, place carved off. What do you mean? Why is mentoring important as an entrepreneur?
That thought, I think, starts with the idea that entrepreneurship can be a lonely business. When you think about it, as the CEO of an entrepreneurial company, you might have investors and board members that you are beholden to, that you report to, that you try to package reports and information to keep them well informed, but their agenda is not perfectly aligned with yours. And then employees who report to you and in some cases tell you the things that they believe you want to hear, but they're not really a peer either. So you're sort of at the center of this hourglass with folks above you that you're accountable to and folks below you that are accountable to you, and it's hard to find peers. And so in that moment you ask yourself, who do I trust? Who should I listen to about important issues that I'm facing? And if you haven't developed a network of mentors that you can turn to who are only interested in your long-term well-being, who are not investors in your business, that creates a bias. They don't work for you, that creates a bias. They're not shareholders. They are just competent, experienced mentors that are motivated by giving back some of what they've achieved through their entrepreneurship. If you can cultivate those relationships, they'll be extremely valuable to you at critical moments in your entrepreneurial development. And so a mentor is a special case of somebody in your network, but they have these attributes that make them a little bit more trustworthy and a little bit more valuable. And so as you create your purposeful network building, it should include these mentors. And how you would find them and approach them is some of the magic. And holding on to those relationships over many years. I have a mentor that I met when I was 22. And he talked to me the other day. He called me in California and we chatted and caught up. I consider him to have had a very meaningful impact on my life over decades.
That's a really important principle. I actually contributed to a book called The Third Opinion. And it was similar in the sense that what it said is, being the CEO of an organization, this was focused more large organizations, but it's good to hear it's true in startups too. Being the CEO of an organization is exactly what you described. Very lonely, this hourglass. And if you're listening only to the people that are below you, then you're kind of in this self-reinforcing network. Everybody kind of believes the same thing. And the people above you reporting to, they probably believe the same thing too. And the whole argument of this book was you have to find these outside advisors who can help you see the world in a different way, help you see something you're not seeing, maybe have the courage to tell you, you know what, Greg, you know what, Nathan, you're doing this, but it's the wrong thing to do.
I was invited by what was UVSC at the time to come do a 2-hour symposium on mentoring and to help design a program where the alumni of that school would come and connect to the students. And over the course of a few months of thinking, designing, and preparing for that, I learned an important lesson. That is, the responsibility for the mentoring relationship is not with the mentor, it's with the mentee. And as much as we try to find groups and bring them close to the students and young entrepreneurs and force an interaction, it's almost like trying to force a dating relationship to happen where it just doesn't have energy. People are attracted to each other for peculiar and interesting ways. And a mentoring relationship is a social engagement. It's an exchange back and forth. And you can put a lot of energy into trying to manage it from the top and cause the mentors to show up at certain times and be in certain places and answer questions and so forth. But I think the much more effective route is to spend some time talking to the students or the younger entrepreneurs and saying, the quality of your mentoring world is your own responsibility. You need to own it. You need to pick them and go find them and make it worth their while. Give them what they need so that they will stay in that relationship over decades. It's not money. Give them what they need to be able to maintain that relationship and feel comfortable about it and feel proud of the contributions that they make. Follow their advice, report back, be friendly, be predictable, be honorable. And those things are in your power. So
it's well said in terms of, usually you hear mentoring, it's almost like it's supposed to happen by magic.
Yeah.
And really it's much more proactive, both in terms of the student or the mentee seeking out the kind of person they want to have mentor them, but also these things you mentioned, which are, be responsible, be honest, show up, follow through, all these things so the mentor feels like, yeah, this is worthwhile and valuable.
Yeah.
Well, we've covered some great ground in terms of, just hearing your career path and kind of the value of dipping your toe in, and then what can happen after that if you have enough courage. And sometimes when you dip your toe in, it's not a big success, but you kind of keep pushing and you keep, and eventually you start to snowball. Also knowledge, networks, and mentoring. What other advice do you have for students in particular, or, people who are watching who want to be entrepreneurs? What else would you say to them as they think about getting started?
I think maybe my final thought would be that it's important to seek some kind of higher purpose in your work. If it's just about money, you're not going to go the distance. And I'm sure I'm just reflecting things that you've heard from other speakers. I think it's a common theme from entrepreneurs, but it could not be more true. I think in the course of my career so far, I've funded between 75 and 100 business founders and entrepreneurs and CEOs. That's a lot to watch them do their thing, to do their magic and see what works and what doesn't work. And one theme that emerges from me is if you're in it for the money, you should probably do something else. There are some long, hard days, and it requires a sense of purpose, a passion, a commitment that exceeds what you can gain from personal wealth. So find something that you really enjoy and would enjoy doing even if it didn't pay so well. And then when it does, it's just an added benefit. So finding a higher sense of purpose is an important aspect of entrepreneurship.
That's great. Thank you very much. What I'd like to do now is just shift the discussion a little bit to the audience and see what questions the students have. What questions do you have for Greg? Go ahead.
We took a little test to see how likely we are to be entrepreneurs, and I was one of 2 people that scored the lowest for probability to be successful in that market. And I think it's a lot of, because I'm in the Army, I want to get that retirement and then, have that security. And a lot of the questions were take risks, don't have security, that kind of thing. Do you have any friends that, I'd retire at 43, that entered the entrepreneurship market at an older age and are still able to make success out of it, or is that not the case?
Well, my partner, Alan Hall, started MarketStar. I think he was about 45, and a wild success over the next, 15 years. And there are many examples like that. And I think the notion that entrepreneurs are risk takers on some level is a little bit misguided, because one of the things that I find most impressive about the way entrepreneurs think is those who have developed an ability to plan for a soft landing. I'm going to try this. If it doesn't work, I'm not going to lose my house and home and savings. I've engineered a way so that I can take a run at this without risking everything that I've built prior to this date in my life. I think if you lined up 100 competent entrepreneurs and said, do you see yourself as a gambler? They would say no. The majority of them would say, no, I'm not a gambler. I manage risk. I look at the alternative outcomes, and I manage to soft landings. I take appropriate risks, but I don't think they see themselves as gamblers and risk takers. So I think it's a failed notion if you're measuring yourself against that yardstick. And I have a hard time with self-assessment surveys because I believe in the academic literature, for example, we really haven't figured out how to with any significant accuracy predict who will or who will not be a successful entrepreneur. And as I think back over my life, part of the richness of it is meeting literally thousands of entrepreneurs and funding maybe 100. And I've seen extroverts and introverts and folks who are scientifically oriented and folks who are socially oriented. I've seen people lead businesses with passion, almost devoid of practical knowledge, and other people who are very practical and lack very much passion. I met a guy yesterday who sells snowboarding equipment from Maui on the internet. He doesn't interact with anybody. I'm not even sure he puts clothes on. But he's clearly not a social entrepreneur, a visionary, a passionate leader, or any of those things. But he's doing $10.5 million a year snowboarding equipment from Maui. I don't even know how you get to that point. But, there are so many different roads that I would not allow myself to get discouraged by anybody else's measure of me as an entrepreneur. It just doesn't hold water for me at all. Not yet. Maybe one day it will, but...
No, I agree with you. I remember meeting Jeremy Jake, who was the founder of Visio, a software that allowed you to visualize data, and it was just a breakaway success, sold for several billions of dollars. And he's a very kind of quiet, introverted, kind of technically oriented guy, and he did a great job as the CEO of this multi-billion-dollar company that eventually got bought up by Microsoft. But I agree that you can't do it based on a specific temperament. But the other thing I really like that you said, that we've tried to highlight before, is this engineering a soft landing is important. You know, if you can do something while you're in school, or do something while you're doing an MBA, or figure out a way to do something kind of so that you're not, all your eggs aren't in one basket, and if you crash land, your life ends. That's great. If you're waiting until you've got this retirement, that could work. You know, this is not just advice for, you know, entrepreneurs who want to make a big, you know, a big splash. If you talk to people who study career change or study hobbies, and, you know, people want to turn a hobby into a business, they say, don't quit your day job. Start it working on it nights and weekends, and if you've got passion, you'll work on it nights and weekends, and as it proves itself out, then you can reach the checkpoints where you say, okay, I'm going to jump. So I agree, don't be discouraged.
Let me add one more bit of color to that, because you'll get different feedback if I put my venture capital hat on. If you were to come to me and say, hey, I've got a business idea, I'm going to say, how much skin do you have in the game? Are you personally guaranteeing the debt? You have every penny of your wealth in it, because I'm trying to measure your commitment. If my brother came with the same idea and said, I'm about to start a business, I would say, don't put every penny of your money into it. Don't personally guarantee your debt. And for heaven's sakes, you know, hedge yourself against failure, right? Because if I really care about them, even knowing everything I do about venture capital and how I might put that hat on and really look for that 100% commitment where failure is not an option, if it's somebody that I really care about or love, I'll say, try it for a while. If it's not working, stop. Your precious commodity is time, not money. So find a way to experiment with the idea. Go have some sales conversations. If it's not working, go to plan B and just rummage around until you find something that you can develop relatively easily, because those kinds of businesses are out there. But if you go to a venture capitalist seeking advice about how much risk should I take, you'll get an answer that's not in your best interest.
That's a good point. Other questions? Please, go ahead.
Besides knowing some people, what are the other ways to find investors that can help you with money to start your business too?
You know, the greatest untapped resource is angel investors. I think venture capitalists as an industry, we're a pretty demanding bunch. The returns that we require are daunting. You know, I think most venture funds would have a hurdle rate between 40% for later stage investor to 70 or 80% for early stage investor to overcome all the failures that will be in the portfolio. And it's a rare subset of businesses that can meet that standard, even theoretically meet it on the investment day. And the resource, the pile of money that dwarfs venture capital as an industry is this angel network. And working your contacts and networking your way to wealthy individuals who have some ulterior motive for considering your investment. Say it is snowboarding equipment, go find yourself a wealthy snowboarder and start there, right? Because they'll be a little bit more patient. They won't be as rigorous in their approach. They're probably not incentivized just by money. They might just want to go to trade shows with you or ride the mountain with you. I mean, who knows what it will be. Find those tangent incentives and work those a little bit, and you'll end up with a better deal and a more patient investor who knows more about your business than you will from let's say, a syndicated venture fund.
Yeah. That's a good point. Please, right there.
You talked about being in the right place and at the right time as far as networking. What would you say those places and those times would be, especially for students going to college?
You know, it's kind of interesting. I know it when I see it, but I still have a hard time predicting it. Alan Hall put together a conference a few months back, an entrepreneurship conference. And I guess going to it, I felt like it might be underattended. But when I got there, I realized somehow the way they organized it and the way they put the panels together, you know, everybody who was sort of at the epicenter of entrepreneurship in Utah was at that conference. And I thought it was a tremendous opportunity for people to network, but I may not have predicted it. And sometimes I'll go to something that I feel like this will probably have sort of the right people, and I'll get there and it'll sort of be attorneys and accountants, and I'll sort of go, well, I misjudged it. So it's hard to predict in advance. But you sort of know it when you see it. When you're in a room and you're surrounded by sort of entrepreneurs and CEOs, that's an interesting place to be.
Right.
So I don't have a list.
Yeah.
I wish I did.
Yeah. Yeah. Please, go ahead.
You talked about that mentors in a mentor-mentee relationship, sometimes they're looking for things more than just money. I mean, as a student, I would love to have a mentor and love to find those mentors, but Are they just looking for positive relationships or trying to give back where they've been given? Or what kind of things can we look for to offer to a mentor rather than just this money incentive that you were talking about?
You know, I think it's easy to underestimate the value of a positive relationship and just an engagement of something that's meaningful, being a part of building something that's important. There are 1,000 people in Utah that have more money than they can spend in the balance of their lifetime. It's not about that, right? And they also have a sense of loyalty to where that wealth and success came from. Some of it might go back to their school or to their church or to their community, but part of it goes back to the notion of entrepreneurship. Entrepreneurs in general are a very giving group. If you ask them for help and make it easy for them and actually implement what they say and provide feedback so that they can feel like their comments are leading to success and that success is measurable, that's often reward enough. If you're in an area that they enjoy, let's say that you understand they have a hobby with muscle cars or hang gliding or whatever it might be, and you can speak to that in some way, that your business model somehow touches skiing or vacationing or Europe, or they speak Spanish or whatever it is. Sometimes those kind of connections are more meaningful than you would imagine. It just resonates with them from the haze of business opportunities that they might look at. These one or two jump out at them and say, these seem like easy folks to work with, and the idea resonates with me. I think I can make a difference, and it's up to you to sort of nurture that.
With the economy as it is in America, how courageous are investors in investing with new entrepreneurs and new ideas?
I think it is a time to be very efficient with capital. It's incumbent on you as the entrepreneur to get the most mileage out of each dollar that you commit. And you know, one of the fundamental principles I think that applies in entrepreneurship is a willingness to work for free. You as the entrepreneur have to separate your reward from your effort. And you're not really taught that. Maybe you are in school, but not out in the world of jobs. You're sort of, I give you an hour, you give me $1, and that's how this employment relationship works. Entrepreneurs have to be able to separate that and be able to work for free for an extended period of time, even if they're moonlighting. Maybe it's not full time, but if you can't separate your reward from your effort, then it's going to be extremely difficult for you. And there are a lot of businesses that come seeking capital so they can pay wages, and that's a difficult conversation. So first of all, you put your own effort in it to demonstrate your commitment and your willingness to be efficient with other people's capital. And that demonstration goes a long way into that conversation, especially in an economy like we're in. I think institutional investors are clenched up a little bit, waiting to see what happens on the exit markets. But angel investors are not looking to IPOs for their exits. They're not really watching the Dow. These are people who are disconnected from some of the things that are causing venture capitalists and private equity firms some pain as they're struggling to access debt and exit markets. Those rules don't apply to angels. So that would be the place to make an effort in this economy.
That's great. Why don't we have one more question?
I'm going to go into patent law, and I'm going to be working with a lot of brand new businesses, people who have new inventions and things. So I kind of want to know if you have any advice for if I wanted to invest in one of those companies, or in order to attract other people to invest in those companies as angel investors. What are some things to look for? What's some general advice?
You know, my experience is beginning to show me that starting with the mousetrap is not probably the place to start. So I'm going to be discouraging to you right now. When I think about tech transfer and inventions and so forth, and I try to think about what percentage of ultimate business success and investment harvest is attributable to the features and character of the product versus everything else required to execute and create a company and sell that company. And I think it boils down to like 5% or 10%. So when somebody says, look at this widget, I'm like, great. You know how much road there is between today and harvesting an investment that an investor would make? And it's fraught with challenges and dangers and opportunities. And it's in the hands, it's the talent of the entrepreneur, not necessarily the idea that I think drives the value. I'm a big fan of the Inc. 500 list. I read it to instill in my mind more creative thoughts. And inside there'll be these call-out stories, and one will go like this. Well, my wife and I started a nursery school, and we were doing the daycare, and then next thing you know, now we're selling chocolates. The story will sound like that. You'll be like, well, how does that even happen? How do you migrate from something over here to something over here? And it's sort of that entrepreneurial spirit saying, what are the assets? What do I have? What are the opportunities? And I'm not afraid to adapt, and I'm accountable to no one. If they haven't taken money from somebody who will cause them to adhere to a business plan, they're just, every day is a new day, and I can go in an entirely new direction. And the more stories like that you read, the more you realize it's really not about the features of the product. It's about in whose hands that product is. And some of the more successful businesses that you look at, I mean, do you think McDonald's has the best burger? But somehow, right, there's a lot of McDonald's and a lot of success around that, but it's not about the quality of the product. And that's true of most everything that you would look at. It's not the best quality product that wins. It's not even the smartest or the cheapest. It really is about execution. I'm not sure how much I believe that yet, but I feel myself leaning that way, that I'd much rather have a mediocre product in the hands of an outstanding entrepreneur than a stunning product in the hands of a scientist who doesn't know that much about business. That's a recipe for a long road, I think, in my experience.
That's great. Well, it's been wonderful having you, Greg. Thank you so much.
You're welcome.